Demand for ATVs and jet skis evaporates, and the artificial intelligence stock bubble. Today, I read an interesting article on ZeroHedge.com, written by Tyler Durden, likely a pseudonym for writers at Zero Hedge, titled, Polaris Warns Challenging Retail Demand for ATVs and Jet Skis. The author of this article referenced the Polaris CEO as saying, as consumer confidence and retail demand remains challenging, we have maintained our focus on managing dealer inventory and delivering better operational efficiency. The author went on to say, Polaris reported sales of $1.72 billion, which is down 23% year over year. Here are my thoughts. I hate to hear about the slowdown in sales at Polaris. I'm sure this higher interest rate environment is more difficult for companies like Polaris. Some people purchase their products for some type of utility purpose. Others purchase these as expensive toys. When interest rates were low and when people were receiving government stimulus checks, they had money to go out and buy expensive toys. Now, this isn't as easy for some Americans. Many are struggling in this higher interest rate environment, especially people with debt. If Polaris is seeing sales slow right now, I can't imagine how bad it could be if we enter an ugly recession. Some people with expensive toys may dump them on the market because they can't afford them anymore. Some may be able to sell them, while others could be left with no option other than repossession. During the Great Financial Crisis, there were people who were forced to give up all types of personal property. They had no choice. Could it ever happen again? Sure it could. Who knows what the future holds? I read some of the comments beneath this article. I'll share some of them with you. The first commenter said, prioritizing food and shelter over toys is paramount in challenging economic times. The next commenter said, as someone living in the forest, I look forward to a decrease in city people driving around the woods in loud RC car clones. Another commenter said, I worked at a couple farmers markets over the past several years. The majority of vendors that make handmade goods are stating the same thing. Sales are down 25 to 50% from the same market 2 or 3 years ago. You can tell the consumer is losing their disposable income and concentrating on just the bare necessities. The last comment that I'll share with you came from someone who said, people spending their money, or should I say credit on crap they don't need. Payments, payments, payments. Repo, repo, repo. I'm curious, what do you think about all this? Share your thoughts in the comment section below. I read another interesting article today. This one was on Yahoo Finance, put out by Fortune, and written by Ryan Hogg, titled, AI stock boom has created a risk we've never seen before, says boss of $2 trillion Norway oil fund. The author of this article referenced Nikolai Tangen, who said we are heading for a period of low returns and said there was a new reality in the stock market amid geopolitical tensions and falling liquidity. He also said the time of very low interest rates is gone and the world is a much more dangerous place. Here are my thoughts. I realize AI could be a game changer in our world, but I have to wonder at times if we could see a repeat of the dot-com bubble. Back then, we saw some crazy run-ups in stocks. That all ended badly after the bubble burst. Some stocks recovered and are still around today, while others disappeared. All of the hype surrounding AI just reminds me so much of that time period. I'm not saying there's a bubble. I'm just saying all the hype surrounding AI reminds me of what it was like in the lead up to the dot-com bubble bursting. But what do I know? I'm just some guy on YouTube. Now, I read another interesting article today about AI. This one was on Yahoo Finance, put out by Tom's Hardware and written by Hassam Nasir, titled, Baidu CEO warns AI is just an inevitable bubble. 99% of AI companies are at risk of failing when the bubble bursts. The author of this article referenced the Baidu CEO, Robin Li, who said, AI is just another bubble, like the dot-com bubble. Ultimately, only 1% of companies will remain afloat in this cutthroat industry. I really thought that was interesting. While I thought the hype surrounding AI reminded me of what it was like in the lead up to the dot-com bubble bursting, I would have never thought that 99% of AI companies would be at risk of failing when the bubble bursts. I really have a hard time believing the percentage would be that high. Now, the author of this article went on to reference Robin again as saying, AI is just an inevitable bubble similar to the dot-com bubble in the late 90s and the mobile internet market. He also said it will take 10 to 30 years before AI replaces human jobs. Here are my thoughts. This could all be true, but there is something I want to mention. AI stocks could still have room to run. During the run-up to the dot-com bust, stocks continued to defy logic for quite some time. Just when I thought some couldn't go any higher, they did. It truly defied all logic. I read some of the comments beneath this article. I'll share some of them with you. The first commenter said, "He may be right, but that bubble takes time to expand, and it's barely started. We'll see in 10 years. The next commenter said, "He sounds like my 90-year-old aunt who says leave your money in the bank at 2% because the world is coming to an end." Another commenter said, "When the AI bubble bursts, it is very likely to trigger the Great Depression of the 2020s. The bigger the bubble becomes, the more likely it is. Your cash parked in a bank at 1% yield may be your savior." I'm going to chime in about that comment. I don't know why anyone would have their money in the bank at 1% when you could buy short-term U.S. Treasuries paying over 4.5% and no state tax. Apparently, there's a segment of the population who isn't too worried about a possible bubble because they are still spending. I read an article today on Yahoo Finance, put out by the Associated Press and written by Christopher Rugaber, titled, "Wealthier Americans are driving retail spending and powering U.S. economy." According to the author, wealthier consumers, boosted by strong gains in home equity and stock market wealth, have increasingly driven spending at retail stores and restaurants. Lower-income consumers, by contrast, have been disproportionately squeezed by higher-priced rent, groceries, and other necessities, leaving them less able to spend on discretionary items like electronics, entertainment, and restaurant meals. Here are my thoughts. If we ever see an AI bubble burst, some of the wealthy Americans mentioned in this article may need to cut back. Like it or not, AI stocks are likely in most people's retirement funds and after-tax investment accounts. With that said, a lot of people could see some of their wealth evaporate. Note I said could. It's happened in the past during market downturns. Some people who were living large had to alter their standard of living, and it happened pretty quickly. I read some of the comments beneath this article. I'll share some of them with you. The first commenter said, "This is why the government will do everything they can to ensure that the asset bubbles keep inflating. Those without assets will simply be wage slaves until they drop." The next commenter said, "That is what the Fed wants, wealthy people to drive the economy and everyone else suffers." The last comment that I'll share with you came from someone who said, "I have been to the USA quite a few times, and it's obvious that the gap between the wealthy and the rest is huge. The American dream is a hoax. Now the politics is driven by the wealthy, usually inherited wealth, and it's getting worse." I'm curious, what do you think about all this? Share your thoughts in the comment section below. If you enjoyed this video, consider subscribing to the channel. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.